The digital realm isn't always what it seems. News that seems negative at first often turns out to be beneficial for investors. And when you zoom out and look at things from a bigger perspective, you sort of realize that everything going on is actually taking crypto in the right direction. Keep watching this video as we tell you some gloomy crypto news that actually bolsters the case for decentralization. First up, the future is decentralization. Believe it or not, we actually think this crash has done more good than harm. Now, what we said might have made you super angry, but just hear us out for a second. Losing money is a part of the game. And if you're playing around in a market as volatile as crypto, then get used to an occasional crash as well. But the fact that this crash has revealed so much about the future of crypto is what makes it so important. Almost every CeFi, centralized finance entity out there, has hit rock bottom in what experts are calling 2022's crypto winter. Celsius, Voyager Digital, Three Arrows Capital, all of these CeFi crypto platforms have had their operations proved faulty. And that's mainly because anything that's centralized is prone to vulnerabilities and corruption. In contrast, when you look at protocols like Aave or Curve Finance, you realize how it's business as usual, since DeFi is not only neutral, it's also very robust. Like, how can crypto investors ever forget that CeFi platforms froze their funds and prevented them from withdrawing anything amidst a terrifying collapse of the market? And at the same time, you have DeFi platforms that didn't even bother making any changes to their operations and let investors decide what to do with their funds. And honestly speaking, that's the way it should be. Investors should have control over their assets. That's why they don't need to have their funds tied up in a centralized platform. Still, it's not like all CeFi platforms are bad or something. Look at Binance. Even though investors had their funds stored on the platform, they didn't stop users from moving it around or withdrawing it. Binance behaved exactly like a DeFi platform, and that's also why it won the people's trust. So when you hear news about firms, companies, and exchanges filing for bankruptcy or something, just do a little research and you'll find out most of them are actually CeFi. What's the silver lining in that? Decentralization is quietly on the rise. Next, back to the retailers. Bitcoin wasn't just made for the ultra-rich or something. It was actually a currency for the people. Even its unknown developer probably had no idea it would reach heights of almost $70,000, becoming an asset for the rich. So you could almost say it's about timing. Investors who were able to buy in when Bitcoin was dirt cheap are winning today. But investors who have a ton of money will win any day because they can afford it. And because they can afford it, it means they're always speculating. They cash out when the price is high and buy back in when it's low. But the only problem is that since they're pretty much huge crypto whales, they can also manipulate the market. Like, each time they buy, the price goes up and people start buying more BTC because of FOMO. And once it reaches a good price, the whale cashes out, causing the price to drop, leading to retail investors selling at a loss. But this market crash has really changed how whales operate. Since most big-time Bitcoin investors have sold, causing the price to come crashing down to just $22,000, it's given smaller retail investors the chance to accumulate BTC at a low price. Like, remember how the Terra Foundation dumped so much Bitcoin to protest the UST peg, but only ended up crashing the market? Well, we think it's time you looked at things from a different perspective. Why was the Terra Foundation holding so much Bitcoin in the first place? Or when Tesla sold 75% of its BTC holdings, investors were worried that it was a really bearish move. But again, why is Tesla even holding almost $1.5 billion worth of Bitcoin? It's ours. And the fact that these big whales have had to get rid of their holdings just mean there's more for us at a super low price. Bitcoin is finally coming back to the retailers. In fact, small wallets containing anywhere from 0.1 to 1 BTC have actually grown during this devastating crash. Let's talk about Minecraft. Developers of popular sandbox game Minecraft have just announced they'll no longer allow users to integrate NFTs within their applications. And while this news may not be bad for the NFT world in general, it's definitely bad for developers building on the metaverse platform NFT Worlds. But this is what this really means. It means we need to get away from this top-to-bottom control structure. Just because developers said we can't integrate NFTs into the applications anymore, they've managed to kill an entire collection just like that. So what we really need are decentralized platforms and applications that give developers the freedom to play around with their creations without having to be answerable to a typical control system. Minecraft has just demonstrated the limitations of a centralized infrastructure. You could almost call them digital landlords, with users and developers being tenants who have to stay according to the rules. Sure, it'll take some time, but if anything, this crash has proved that the only way forward is decentralization. Time for some more on crypto. Up next, still don't believe in DeFi? Just in case you still don't believe DeFi is truly the future, get a load of this. So we've already told you crypto lending platform Celsius is a classic example of how CeFi is more prone to corruption and vulnerabilities. And you also know how the platform froze users' funds just before filing for Chapter 11 bankruptcy, right? Well, pretty much anyone caught in the meltdown is begging Celsius for their money now. The lending platform owes a staggering $4.7 billion million to users. And even before filing bankruptcy, the firm repeatedly reassured users that they would return their money once the market stabilizes. But all that never happened, and now some people are having suicidal thoughts after having invested their life savings on the platform. Now, the blame can go both ways. Users shouldn't invest more than what they can afford to lose, but who the heck is Celsius? And why are they freezing cash? Classic example of control in CeFi. See, in DeFi, no one can control your money. Your assets are on your personal wallet at all times. We hope something good comes out of all of this, but if one thing for sure, it's that CeFi is coming to an end. And now for Shiba Inu. SHIB investors have been pretty quiet for the past couple of months. Like, even before the crash, the meme coin was struggling pretty bad with price. Either people lost hope in the token or they've cashed out everything they could. But what if we told you Ethereum whales have been bagging huge amounts of Shiba Inu as the market gradually stabilizes? And by huge amounts, we mean nearly $3 million worth of Shiba have been accumulated in the past couple of days. Could it be that SHIB is about to rally? And the most important question of all, should you load up your wallets with the popular meme coin? Well, it all depends on what you're looking for. If you like taking risks and want to make some profit, then sure, stacking up $1,000 worth of Shiba Inu wouldn't hurt. But please keep in mind that this ERC20 token has no use in the real world. All it does is attract investors to cash out profits. So while you're being all sneaky thinking of loading up on Shiba, don't forget there's practically thousands of people thinking the exact same thing. Finally, let's talk about some fishy news. In case you haven't heard yet, Axie Infinity was robbed of nearly $600 million worth of Ethereum and USDC, stored on the company's sidechain Ronin network. The FBI blames the hack on North Korean hackers, also known as the Lazarus Group. But this isn't exactly the fishy news. What's fishy is that the CEO of Axie Infinity actually pulled out $3 million before announcing that the company had been scammed of $600 million. Yikes! Sounds like Mr. Sneaky CEO is about to get in some serious trouble. He obviously knew the price would fall, and that's why he moved 48,838 AXS from the Ronin sidechain to Binance. If the price fell too much, he could sell right in time to avoid losing too much money. YouTuber Asobs was the first one to figure out what had been going on after he noticed how $3 million of coins were moved to Binance. After doing some digging around, he found out that the wallet address belonged to Axie Infinity's CEO, Mr. Trung Nguyen. It's almost as if these tech nerds seem to forget that you can't hide anything on the blockchain. That's it from our side, folks. So what do you make of all this news? Do you think decentralization is a silver lining in all of this? Let us know what you think in the comments below. Remember, don't forget to like this video and subscribe to our channel for more exciting videos in the future. Thanks for watching, and we'll see you next time.